All right, next and the final conversation for today is going to be about price predictions. And that's because, Patrick, a lot of economists recently, Desjardins doing this, as a bunch of others. We're going to talk about Desjardins predictions here specifically, but a lot of economists for the various banks are starting to make predictions of what if this happens, then that might happen with the if this happens with the economy, that might happen with real estate. And they kind of got these different forecasts, and it's all very, very fascinating. I find it interesting. And I guess that's what these people are paid to do. I find it funny that they spend all their time doing this and they're wrong all of the time. In fact, I think if they were 50% right, they would be the most successful economists of all time. They're probably, quite frank. I should ask ChatGPT how often an economist is right. I think the answer is probably less than 20%. But anyways, let's just play with these charts for a second, because I got this graph showing. And this is specifically for the Toronto region home resale prices based on like what happened. So Patrick, walk us through this slide here. I got it up on slide 19. Walk us through what this means, because I think this is fascinating.
Well, I think what Desjardins did in this particular case is they kind of looked at historically what was going on, and they created what they call a base case. So July 2023, if you look at that dark green line, you start to see that given if there's some kind of a mild recession, they're kind of looking at where we are today, which is, if we look at July numbers, we saw GDP into that 0.2 negative territory. So they're looking at it, and prices actually don't come that far off of where we are today in terms of pricing. But if we were to hit a 1990 style recession where there was lots of strong construction, by the way, so in terms of in regards to, first there was a recession, and then there was strong construction that had already gone into it, you start to see that gray line where things are really kind of dive. But they, even in that scenario, by the way, Desjardins is saying it's not going to go to historic lows by any stretch of the imagination. The light green line, if we're into what they call an average recession, again, we come back into that 2021, 2022 numbers. I guess actually that might be even 23 numbers. So it's not that far off. The reality of it is, when you look at the red line, which is more where we're at today, given interest rates, of course, we have weak listings. People just are not selling, and there's not an availability of real estate, and we've got very strong population growth. This goes back to the supply demand issue. And of course, we don't see prices coming too far off at all. And as a matter of fact, we're going to see continued growth. So at the end of the day, they're looking at the dotted line, which is, okay, let's go back to the 15-year average starting, and they're looking at 2005, and you start to 215, and you start to see that we're not coming off. They don't see a big pullback, which is way different than many of the conversations that we're hearing about the Canadian real estate bubble. So this, to me, doesn't show any awful, really bad scenarios, to be honest with you. I don't think we're certainly not going back to a 1990s recession. Never say never, but that certainly isn't looking in the cards over the next couple of years anyways.
Let me ask you this, Patrick. How do you think investors should look at charts like this? Because we got another one to show here, which is, again, a mild to moderate recession that could have a meaningful impact on Toronto house prices. How do you look at these charts, Patrick? Because I look at this and I don't even think it's worth the ink and the paper that it's printed on. And I think that the only thing this does is sell bank accounts for the bank. I mean, the bank's economists have a marketing and sales job to do. That's pretty much it in my view, because I look at this information as pretty much useless and scaring a lot of investors because people read this, for example, in Alberta or in somewhere outside of Toronto, and then they use this kind of information to make a decision that's not great for their financial future, because this chart scared the shit out of them. I think it's useless. It's my opinion.
Well, yeah, I think that's a little harsh. I don't think it's useless. I think you make a good point, though. For the average investor who isn't really educated or sophisticated in how they're looking at these charts, how they're using these charts, you're right. It's kind of a doom and gloom kind of place. I look at them as there's some benchmarks perhaps here. It's part of an overarching look at analysis. I don't put a lot of weight on it. So I look at this and I go, okay, that's good information. It's interesting to see somebody else's point of view. I don't make decisions based on a single chart. It's all part of an overarching, creation of a thesis, if you will. And this is just information. It's a benchmark. So I think to say it's useless is a little bit harsh, but I do understand what you're saying. If you're making decisions based on this chart, that would not be a smart move. So in that regard, if you're looking for a chart to make decisions, it is useless. Having said that, if you're looking at this chart with other charts that you're looking at to get the data, get the information, it can fold into a much bigger picture that you can make decisions. Ultimately, JG, I look at it again as just information to create a thesis and base decisions on. That's it. If you want a useless chart, from my perspective, it's when they compare anything, and whether that's population growth, housing prices, I don't care what it is, and they compare it to where Canada sits in the G7. I'm going, who the hell cares what's happening anywhere else in the world, given the fact that they're different countries, different politics, different economies, different ways of doing things. Like, to me, saying we're the best in the G7, I go, okay, nice, okay, great. Useless information. Bruh.
All right, Patrick, let's wrap up the show by talking a little bit about China. You've kind of hinted towards China. I think we should round out that conversation. Sounds like you got some insider info over there, Patrick. Let's hear it. What's happening in China?
Well, listen, it's not insider information. There's a lot of that stuff out there. But here's what's really happening is, China's very guarded about the information, the data that they let out there. But there's just some things that they just can't hide. So when you're looking at what's happening in their real estate world, it's collapsing. When you start to see the actual numbers of what's going on in the US, what's happening in Europe, for example, the demand is starting to soften. Now, if you're the US, even if you're Canada, and demand softens, North America is not a productive environment. We're consumer debt driven. And if all of a sudden we quit buying or things start to slow down, that of course has an impact on China. And when you start to look at Europe slowing down, that has an impact on China. As much as Russia and China are doing business together and that's supporting what China is producing, it's actually slowing down. So we have to look at what's going on in global macro and how that impacts, a manufacturing driven environment and country like China. So if all of a sudden these things are going on and we're not buying as much, the US isn't buying as much, Europe isn't buying as much, these things are impacting, even India not buying quite as much. So real estate collapsing. There's a lot of things that are happening with China that is going to kind of ripple out, and we have to just be aware of what's happening. And that's really the extent of it. I think China has a big impact on our global economy, and we have to be watching what's going on there.
I'm really pumped for 2024. I'll tell you that right now. I think 2024 is going to be pretty incredible. A lot of the stuff that's kind of been in the pipeline, Patrick, on housing, interest rates, China, kind of all that post-COVID stuff is really going to start to kind of work its way through the pipeline. I think from a kind of a macro perspective, I think we're in the middle of that poopy pipeline right now. And I don't know when we're going to get to the end of it necessarily, but I know in 2024, we're going to be closer to the end than we will be the beginning, in my opinion. So it'll be interesting to see how this market kind of, rebounds or not just rebounds, but how the market, regurgitates after the COVID stuff.
Fundamentally, I think we all have to be optimistic with what's going on in 2024. We can get really distracted from all of the bad news out there, the confusion, the uncertainty. I really do understand all of that. But we have to look at some of the positive things that are in fact happening because opportunities are presenting themselves. And amidst all of the chaos, we have to mentally kind of set ourselves up, put ourselves into the environment, even within the RAIN community, for example, understand that when you surround yourself with like-minded individuals who are looking at the economy differently, that's where opportunities can present themselves. We still are very bullish on what real estate can do when you have the education to do it. And that's what I got to say about 2024. I think there's a lot to look forward to. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.